Good evening, Forex Capital Traders. This is your weekly market update with Ben Esler. That's my email address and the account management phone number if you've got any questions. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your objectives, financial situation, or needs. Trading FX and CFDs involves a substantial degree of risk and should only be undertaken with risk capital. Investors do not own or have rights to underlying assets. So we'll kick off with US dollar as usual. On the 9th, we had non-farm productivity come out last week, which was a surprise to the upside, 0.9% versus 0.7%. We actually sort of had an up and down week on the US dollar. So I think, last time we spoke, I did suggest that perhaps it was bottoming out. And as you can see, we did get a bit of a rally from those lows. Now, that's the daily chart that we're looking at there, the daily chart of the DXY, the US dollar index. On initial jobless claims, came in at 244k versus an expected 240. It's nothing to see here. It's basically the same every month, has been for a very long time at that 240 level. CPI came a little weak, slightly, which obviously is very important for the Fed with their target rate being up at 2%. So no chance of a rate hike while inflation is down below that target rate. It was on target, excluding food and energy. So I think a lot of that is probably down to the sell-off on oil that we've experienced recently, which has also started to see a bit of a rally. These numbers for July, of course. So we have seen a pickup in the price of oil recently. So that should flow through to inflation. This week we've got a fairly decent week of data on the 15th. Retail sales. Retail sales are enormously important for the US economy. 70% of GDP derived internally by consumers, so that retail sales number is a big one. We've also got export-import prices on the 15th. On the 16th we've got some housing data, building permits and housing starts, obviously key as well to their economy. And on the 17th, the FOMC minutes. So it'll be interesting to see exactly what was talked about at that last meeting. I doubt there's going to be too many surprises there. We didn't see much of obviously there was no change in stance, policy stance, no change in rate. And the accompanying announcement was a little dovish, which again, no surprise there. No one's really expecting an interest rate hike, certainly at very least until December. And even December rate hike looking dubious at this point. So if we were to see something hawkish come out of that, we could see a fair bit of US dollar strength on the back of it, but I doubt it. It's probably not going to be a huge event. So the euro. On the 14th, we've got industrial production data. On the 16th, we've got Eurozone GDP. And on the 17th, we've got CPI, trade balance, and an ECB monetary policy meeting of accounts, which will come with a statement. Big week for the Eurozone. Industrial production can move the needle. GDP is obviously a very significant announcement. But on the 17th, that's the big one. So CPI, trade balance, and that announcement from the ECB are all capable of causing some really big moves. Obviously, after that sell-off we had early last week with a bit of US dollar strength, it's recovered. Right now, I'd be very careful going one way or the other with this. And I'd sort of wait for the data to let me know where the next direction is. It's certainly, if you had to do something from here, you'd probably buy it with an expectation or go back up to that top because it still is very much in an uptrend and the momentum is quite strong. Aussie dollar. On the 8th, we had Chinese trade balance come in very strong. That's in renminbi, 321 billion with an expected 292. Export growth, however, was very weak, which is very important for the Chinese economy. So that was a mixed bag with that trade data. On the 9th, we had weak CPI as well. So again, bad news there. That's Aussie home loans came in weak. And consumer confidence wasn't great either. That's Westpac consumer confidence on the Aussie. So, all in all, that sort of backs up what happened on the market. As you can see, that's the daily chart we're looking at there for the Aussie. And it was a pretty poor week. But after a tremendous rally, to be expected. I think last week I might have mentioned that, there was likely to be some weakness. On the 10th, we had consumer inflation expectation. That's fairly significant there, less than last time. But inflation obviously very important. Philip Lowe came out and spoke last week. He was quite hawkish, but the market basically didn't pay a huge amount of attention. Obviously, we got a little bit of a bounce there, as you can see on the Friday, which is when he spoke, and it actually looked like a bit of a buy candle on Friday, and some people did buy it today, and it rallied up early. and it's sort of sold off since then. In the last couple of hours, actually, it's turned itself back around. We've seen falling iron ore prices over the last couple of weeks, which doesn't help. And the run of strong data out of China has certainly come to a halt. Not that it's poor data, it's just the glowing data that we have been receiving is perhaps not so glowing right now. Later on this week, we had China retail sales this morning, actually. They were very strong, 10.4, a little bit of a miss, but still a great number. Industrial production, probably more of a concern. That was a bigger miss. And sort of, that's a big part of their economy. So not the best there, but again, a mixed bag. 10.4% retail sales, even though it's a miss, that's a very strong number. On the 15th, we've got RBA meeting minutes, so often you'll get some big moves associated with that. If there's any surprise in there, I expect it's probably going to be pretty hawkish because Philip Lowe is fairly hawkish. He made it fairly clear in his speech last week that the current market conditions would suggest that the next rate move by the RBA will be a hike and not a cut. And he said that's the impression the market's got, and he didn't want to dispossess them of that impression. Definitely on the hawkish side. Not talking about a rate hike perhaps anytime soon, but perhaps next year or maybe even sooner. Who knows? Depending on how the economy and the global economy goes. But read an article from one of the ex-members of the RBA early last week, suggesting that if the Australian estimates for growth going forward come true, along the global forecasts come true, then we could be looking at 7 or 8 rate hikes over 2018 and 2019. And that might be a little bit exaggerated, but certainly, we are at historic lows here with rates, and there is a lot of room to go to the upside. So interesting to see what comes out of those minutes. And on the 17th, employment data. So, a couple of big events there for the Aussie. Look, I'd probably rather sell it from where it is now. It looks pretty bearish to me. And certainly I think there's a very high chance that we could revisit the highs. From last year, it struggled to get through sort of 78 all year. I certainly think we could expect a sell-off down to those levels again without too much chance of that not happening. The RSI certainly is indicating that there might be a bit of downside. Pound. So on the 10th, this is pound yen we're looking at. I like to remove the US dollar from the equation, considering it so much of the trades have got the US dollar in it. On the 10th, industrial production came in weak. This week we're looking forward to CPI and PPI data on the 15th. On the 16th we've got unemployment data, and on the 17th retail sales. So it's a very big week for the pound. CPI obviously key for the setting of monetary policy at the Bank of England, as is unemployment data. Retail sales as a developed economy, any of the developed economies, retail sales is very important because so much of their GDP is derived internally by consumers. All of that is a big week for the pound. And look, you'd have to say, having a look at the chart there, you've got pretty much a textbook Bollinger RSI on the daily, which would indicate that perhaps it's about to make a leg all the way back up to 147, and that's probably not a bad trade. So yeah, if I was doing something there, I'd be buying it. We've got a lot of crosses that look similar like that this morning. Euro JPY, NZD JPY. We actually sent out a VIP text to buy NZD JPY this morning, which is it's up a couple of pips now. JPY. So this is USD JPY we're looking at. On the 3rd, we had foreign investment. It did drop from the week before. On the 8th, we've got economy watches. We had economy watches, and that was pretty good actually. On the 10th, we had a turnaround in foreign investment, so I've left an extra week in there for foreign investment. So yeah, it was weak. It's recovered. Machinery orders were very weak. However, expecting a drawdown in 1%, 5.2%, so that's bad. All of that smashed out of the park this morning by a tremendous GDP number out of Japan. Bank of Japan will be very happy with that. And look, this could really breathe some life into the yen. It certainly hasn't today. But if we've had helicopter money coming out of the Bank of Japan for a long time now, which is to say they're literally just buying bonds hand over fist, anything they could find. And if we get this sort of growth coming out of that economy, they can't leave the rate at minus 0.1%. Now they have said they'd let inflation cook a bit hotter than their target rate at 2% before they'd start to tighten. So we've got a long way from that because their inflation is still very low, very stagnant there with inflation. But if they have that sort of GDP growth, that's got to pump some money into the economy, and that has to flow through to wages, and that has to flow through to demand and inflation eventually. So that's a very good sign for Japan. On the 17th, we've got trade data and foreign investment to look forward to. Both of those, they can move the needle, but not a big week for Japan. Now, this technically, you'd have to say at the moment it looks like a buy, but really it's going to come down to global risk. So a lot of the run-up that we've seen on the yen last week was surrounding that the North Korean situation. We'll talk about that more when we get to gold. Oil, on the 9th, we had another massive drawdown in oil stocks, which is terrific. Great news for the oil price. We saw that big sell-off last week on Thursday, obviously, which I think was more profit-taking than anyone actually being bearish on the price. Big drawdown on oil prices. Again, as you can see, there's 6.5 million barrels drawdown with an expectation of 2.7 million barrels. So just a very big drawdown over expectation. On the 11th, we had the Baker Hughes rig count. It only ticked up three rigs. So certainly the rate at which the shale guys in the north of America are opening rigs has certainly slowed to a crawl, and it actually stepped back one last week. So that's a good news for the price of oil as well. This week, we're looking forward to the 16th with another crude oil stocks read. And if it continues with these, the last 4 or 5 weeks, they've sort of averaged more than 5 million barrels, which is huge. So if that continues, we can expect the price to keep going up. Another read on the Baker Hughes rig count on the 18th. So that's what's to watch there for oil prices. I'm certainly of a mind that you can buy dips, and I'm just about ready to go in myself right now. That candle from Friday certainly looks pretty bearish. It's testing the 20-day moving average there, as you can see, in the middle of the Bollinger Bands. And I wouldn't be surprised at all if we see this head back up. You can see from those last two lows as well on the daily chart, back on, back here and here, and even here, we're still in that uptrend. So that channel has not been broken. Certainly, if you were to buy it here and it broke down through that channel, it would probably be a smart idea to take a stop there. And then look for an entry lower. But I certainly am of the opinion that we're going to see these higher prices before too much longer. So I'll wind up with gold as per usual. So the VIX was down 16.9% on Friday. Massive drop. And we did see a bit upside there on gold, which is, the opposite to what you'd expect, obviously. But that huge rally that we've seen on gold just been spurred mainly by North Korea and Trump. So you can actually see it shoot up sometimes when he sends a tweet out. So quite an exciting time to trade gold. Now, technically, definitely looks like a big sell. We did actually send out a text message to our VIPs this morning. I sent one out when gold was at about 12.89. As a sell, it was a Bollinger RSI. So as you can see, it's just come up and hit 70 on the RSI and started to retreat as it's gone up and come back through the top of the Bollinger. So that's pretty much a textbook Bollinger RSI on the daily, which would indicate that we're going to get some downside. And I wouldn't be surprised if we see it go right back down to 1250. That's where the bottom Bollinger is now, and perhaps even lower. So I would not expect a retrace. I would not be surprised, by a retrace of that in the very near future. Certainly, that could be wiped out by a situation where, if anything actually happens between Korea and Trump, that'll probably get us through the 1300. We'll see some upside. 1330 sort of being the first significant resistance there, where it shot up to on Trump's election. But it seems unlikely that anything will actually occur. I think a lot of this right now is posturing by Trump to try and sort of get some leverage in the discussion to force the issue the way that he wants. And I think he's just announced an investigation into the trade relationship with China, presumably so he can find some sort of disparity and then threaten tariffs to have them fall into line regarding North Korea. So I expect that's how it's probably all going to play out. It'd be interesting to watch though. Very interesting, and gold is always exciting to trade around these sort of geopolitical events. Now, look, as I said, this morning we sent out a sell on gold and a buy on NZDJPY and a buy on the Nifty on the VIP SMS alert, and they're all those trades are up. So, look, talk to your account manager if you're not getting those SMSs. Give them a call because they're really good value. All right. Thanks for your time. Talk to you next week.